Get ready for some day trades, swing trades, and option trades. Hello, traders. It is Tuesday morning, June 16th. We are 3 hours into trading. Man, what a market. We've had an incredible rally. Let's go to that daily chart first. Let's paint the picture. Back in here, we had this upward sloping trend line through the upper end of the channel. You can see how the SPY broke out above this. I've been mentioning time to take profits on your longs. We're going to get a pullback. That's exactly what happened. In my comments during the last couple of weeks, I've been saying when we get this pullback, it's going to be very, very sharp and very, very brief. The reason for that, bullish speculation hadn't hit these levels in over 2 decades. Bullish speculators were due to get flushed out. That's exactly what happened. We had 1 test, 2 tests, 3 tests of that 200-day moving average. I'd mentioned in my comments also that if we were above the 2-hour high yesterday, that we were likely to continue to grind higher, and that would be the 3rd confirmation of support, and that we should see follow-through buying. So yesterday we finished near the high of the day on the SPY. I loaded up. I sold a couple out of the money bullish put spreads. I'll show you those two. And I bought SPY and I bought QQQ. This morning we had about a 100-point move higher on the S&P 500. Hello. Thank you very much. First, I'm going to show you all that information. Then I'm going to paint the picture for the rest of the day. So let's go into the chat room. I want to make sure that you know that I said what I claim. And so I'm going into my chat room yesterday, and you can see this is about an hour before the close. And you can see here I sold a bullish Lotto put spread. That means that it's expiring this Friday on NVIDIA. Sold the 350, 347.50 for a 45-cent credit. As we continue to look down, you can see that I also sold a Facebook 225, 222.50 bullish put spread. Got 46 cents for that. That also expires this Friday. Those are looking great. I'm going to continue to scroll down. You'll be able to see some of my comments. Again, this is simply so that you know that this is real. I don't have time for bullshit. I don't have time to go back and fabricate all this stuff, but I want you to know that these comments and statements are actually made by me. If you've watched my videos, then you know they're true. If this is your first time watching, then you might wonder, I don't know if this is a bunch of hot air or if I can actually trust this research. So I'm going to continue to scroll down because I want to show you that near the close of the day, I was buying the SPY, and there I bought the QQQ at 238.30. That was just before the close. I did have a long on SPY. We're going to rally. I'll probably hold SPY overnight, and I had gotten long SPY earlier. So I held those 2 positions. Now we're going to continue to scroll down. There are quite a few members posting overnight comments, so I need to get through those, and we'll get to my early morning comments today. So pre-market comments today. As I scroll down, you will see that I'm going to take profits on my overnight positions very, very early. And the one thing that I do mention to swing traders in here, swing traders should start selling out of the money bullish put spreads on tech stocks. Don't chase this opening rally. There will be opportunities to sell the spread, okay, or spreads. Day traders, wait for the bid to be tested. Talk about a early gap reversal, and if it's going to happen, it's going to happen in the first 45 minutes of trading. Look for consecutive long red bars closing on their low. Okay, so the table is set for that. So we come in this morning, start posting some comments, and as the market starts to unfold, I'm long some Netflix, and pretty sure I made a little bit of money on that one, but I really want to get down to some of the other positions that I took, and I started scaling in because I saw some stocks that had excellent relative strength. So we're going to get down to those comments right in here. The market is compressing. It's holding the gains. Market continuing to compress. Bought some SQ, 94.95. Now we're about 40 minutes into the open. Sorry for the delay. I bought some Starbucks in here. I'm still holding Starbucks. I'm down a little bit on that, but I'm going to continue to hold it because it's above the 100-day moving average. It had nice relative strength early this morning. So here we go. This is 50 minutes after the open. 1OP is spiking, and that is an issue. Drawing the chart now, will post. So I let members know that this is a support line that needs to hold. If the market drifts down, then we can buy right here on that support. But if not, then you have to stop out here because it's going to mean that the market's going to roll over. There's your big spike in the 1OP indicator, and I drew this in and I said this is really what we'd be looking for in terms of a formation. And I had also mentioned in here that bullish speculators are about to get flushed out. And that's why we did not want to buy that opening high. And we'll continue to scroll that. I think bulls who are nibbling at the high of the day will get flushed out. Okay, this is an hour after the open. So now we're going to go in, we're going to take a look at the rest. ENPH was a stock that I bought. I was long SQ. I added to that position. Also bought, shorted BA for a nice gain. CRWD was another stock that I tried on the upside. So all of this information is real. These trades are happening in the chat room real time, and I'm showing you what I'm doing. So here was the setup. We had this massive gap higher in the SPY. And as we started to compress in here, we had one of two scenarios that was going to play out. One scenario was that the market would test this high, and eventually, after maybe an hour and a half, 2 hours of trading, we would break out to the upside. But when we were in here, I saw some tails above body. Look at this 1OP indicator spike. This is all that I use to trade the S&P 500. It is our governor. It is our gyroscope, so to speak. It keeps us on track. It tells us exactly what we should be doing at any given period of time. So we get this cross right here, right about in here, and it's saying, danger, 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 danger. Do not be buying up here. Wait to see what happens. So we get this bearish cross. Now what you would typically do is on a breakdown like this through the low of the day, or if it were an upward sloping trend line on a 5-minute basis, you could also short that type of breakdown as well. But on a breakdown to a new low of the day, that's your shorting opportunity. 1OP is telling you to get short here. You can see yesterday afternoon right in here, another warning, short. That turned out to be a nice short. So in here, look at that cross. Buy. Buy right in there. So this indicator is deadly, spot on. We don't always trade the S&P 500. Yesterday I did, made a ton of money trading the S&P. But if we trade stocks with relative strength and relative weakness, we have a lot of cushion. And I'm going to show you exactly that. So we had this compression up here. I had some stocks that looked like they really wanted to push higher, regardless of what the market did. ZM was one of them. SQ was another one. ENPH was another one. And so I started scaling into positions. And when we got this market pullback, I told everyone I'm not going to trade from the short side. I'm only going to trade from the long side because I believe that the overnight news was good. We had news that the Treasury Department's going to start buying corporate bonds. That news was actually out yesterday. We had the FOMC chairman speaking this morning. That should have been pretty decent news. We also learned that there was $1 trillion stimulus plan, an infrastructure plan that Trump was going to be proposing. Aha, another great piece of information for the market. So when we broke down below this low, I didn't want to short because I felt that the better play would be on the long side, but you could see these long red candles closing on their low, and right in here we had this bullish hammer off of almost a gap fill. I think we were 30 cents away, maybe 40 cents away on the SPY, but you could see how it bounced instantly. That and the 1OP cross, let's put the crosshair up here, it happened right in there. So it didn't happen here. It didn't happen here. It happened right here off of this low is where you get your 1OP cross. That's where we started adding to positions. I added to ENPH. I added to SQ. I added to CRWD. And as the market rallied, I was scaling out of those positions and taking profits. I also bought the S&P 500. I made about 7 points on that bounce as well. That's how we do it every day. So what's the indicator telling me right now? First of all, we're in the middle of the day. Second of all, we're in the middle of the range. So if you take the high, you take the low, and you find the midpoint, yeah, we're somewhere in there. And now the market is in the middle of the day, so trading will be relatively lackluster. However, I'm going to put that crosshair back up here. You can see how 1OP was below zero, had a nice bullish cross right here. Where was that bullish cross? Was it here? Was it here? Was it here? No, it was here. This is an anticipatory indicator that took me 10 years and an ungodly amount of money to perfect. And it's optimized for a 5-minute chart. This is what we use to tell us when we need to be buying, when we need to be taking profits on those positions, and when we need to be shorting, and when we need to be taking profits on those positions. So if you're long in here, it's telling you you should be taking profits because we're getting this cross up here. Go to the sidelines and wait. Oh, wait a minute. Now we got a breakdown. Now you'd want to short. As we start coming down into here, you see this indicator troughing and starting to get a bullish cross. You should be taking your profits on your short positions in here. And considering a long position, now you've got to have at least some kind of technical confirmation that it's going to rally. A close above the open of this long red bar would be enough to get me in. Nice little entry point right there. Higher low. You can see how we're forming an upward sloping trend line. I think the news is very good right now. I think that we've gotten some of the bullish speculators out of the market. You can see how we've bounced off that 200-day moving average. We've tested it 3 times. We've tested that support level 3 times. Now we're off to the races with this bullish hammer forming, and we have quadruple witching happening this Friday. Now, that has a bullish tendency, at least in my opinion. Once the momentum is established, stocks tend to continue to go in that direction. So I believe that quadruple witching is going to have a bullish bias to it. The market got overheated. Bullish speculators had to be flushed out here. They had to be flushed out on a 5-minute basis as well. I mentioned this to all of my members. I said, look, anybody buying up here, nibble, 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 we're going to go to a new high. We're going to go to a new high. This is it. This is it. We're off to the races. These people right in here, they're going to get the door slammed on their face, and we're not going to be one of them. So we're going to continue to wait. The 1OP indicator is telling us to wait. Whoosh! Nice entry point here. Much better than getting long up here. That is how we do it. So when you watch these videos every single day and you wonder, how the heck can he have so many winners in a row? This is it. This is how we do it. So I'm going to go through. I'm going to take a look at some stocks that I think are setting up well today. I think the market sets up pretty well. I think this is the time to go out and start selling some of those out of the money bullish put spreads on the notion that that 200-day moving average is going to hold. You can see we never even got down to the 295 level, which is really what I consider to be major support. Horizontal resistance now becomes support, lines up with the 100-day moving average. This drop yesterday never even got close, and then zoom. Reverse the whole day closing on a high, follow through today. I think we're going to continue to move higher. I wouldn't be surprised if we challenge that 322.50 level this week. So, don't want to get too far ahead of ourselves because the coronavirus is starting to show signs of acceleration right now. So as states are reopening, we're starting to see more cases. We still need to practice social distancing. We still need to have our face masks on. But President Trump said we are not shutting down this country again. And if the recovery is prolonged and it takes longer than we would like, that's okay. We understand that states have to do what is prudent. But we're going to throw the kitchen sink at the frickin' problem, and we're going to print money until the cows come home, and that's going to keep interest rates near 0%, and we're going to have stimulus programs, and we're going to try and get the money to small businesses and to workers until this economy gets back on its feet. That's the plan. So you can appreciate that if we're struggling, there's going to be more and more and more money thrown at this problem. Well, the money has to go somewhere. If you're buying bonds, Those bond yields are not keeping pace with inflation, so you are generating negative real returns. Not a very good deal. I think I'll take my chances and put my money in the market and hope that this recovery takes root. That's the prevailing mentality that we're seeing out there right now. And central banks are providing this huge safety net. So you must be long. Well, might I expect some market volatility like this while the market and the economy starts to get back on track? Yes, absolutely. That's why we're not out there buying call options. Option implied volatilities are high. That means you're going to be vulnerable to a contraction in option implied volatilities. You're going to have time decay working against you. So you don't want to be long premium. What you want to do is you want to distance yourself from the action. You want to sell out of the money, bullish put spreads below this major technical support. You want to find the strongest stocks and look for trades that generate somewhere in the neighborhood of a 25% return in 2 weeks. That's what we've been doing. Those trades are out there. I showed you the NVIDIA and the Facebook trades that I did yesterday. Those expire Friday. If they expire, I'm going to make about a 25% return in 5 days. So that's what we're going to be focusing on. I'm going to show you a few searches that will show us the best stocks to be in right now. I've got to tell you, all you got to look at is the QQQ. That's the NASDAQ 100, Google, Amazon, Apple, Microsoft. I don't know if I mentioned Facebook. The big giants, the big tech giants, there are about 7 or 8 of them, and they comprise 25% of the NASDAQ 100. That's where you want to be. Look at the NASDAQ 100. There's your prior high, made a new all-time high last week. We're back above that resistance level and likely to challenge that all-time high. So this is not a huge guessing game. Stay in tech. That's where your best bets are. Avoid travel and entertainment. Avoid the laggard sectors. Avoid oil. Some point in time, if the economy gets back on track, those will be fine plays. Not yet. Not just yet. So we're going to go through, going to take a look at heavy buying list right now, and then we're going to continue to click through. So Google, yes, like it. Just going to use the daily chart because I want to find 1 or 2 stocks that you can really latch on to. LRCX, I like it, but it needs to get through this resistance. Looks good, bouncing off the 100-day. Adobe, new all-time high. Yeah, you could probably buy this. And look, during the last 2 days when the market was down, what did the stock do? Held its own ground. It did not pull back. The stock wants to go higher. That's relative strength. BA, forget about it. We don't need to mess with BA. We got better picks. BA is going to struggle. They got a lot of issues. Apple, right back on its all-time high. Yes, I like Apple. If you saw that video that I posted a week ago Sunday, man, did we make a killing on those Apple calls Monday, Tuesday, Wednesday. That stock just took off. That was a really nice pick. Roku, wouldn't mess with it. Look, it's below the 100-day moving average most of the time. Now it's poked above it. Okay, that's nice. There's no relative strength here. We want stocks that are moving higher. Caterpillar, that's a cyclical stock catching a bid because of the infrastructure bill that's being proposed. I'm lukewarm on that. I'd rather be in tech. So I'm going to continue to go down. IQ with a big day. Look at that. I kind of avoid that only because it's so far ahead of itself and you see a lot of red. So it gapped up here and now it's been giving back those gains. Microsoft, perfect. Yes, nice. Drew that high right there. So I didn't really have to go into this search today. I'm going to show you something a little bit unique. I like SQ. I think SQ is a great stock for overnight. That's one that I'm going to be highlighting today. So yes, SQ, I think it does well the rest of the day. I think it does well overnight. You can see the gap higher right here. You can see how it's been able to hold its gains. Let's put up the SPY overlay. Here you get this market pulling back and pulling back and pulling back and pulling back. And what does the stock do? It didn't even make a new low for the day. It maintained that low for the day. And as soon as the market found support, whoosh, higher. Yes, I like SQ. I think SQ does well. Right here you can see EMPH. Look at that baby go. Love it. This is one that I traded in the chat room earlier today. Lots of relative strength on the open. Market pulling back. Stock much higher than its opening price. continues to float higher. I think ENPH does well the rest of the day. I'm also in PTON. That I'm trying to scratch. I got in, not a great entry for me. So I'm trying to scratch that. And yes, actually, I did scratch that trade. So I'm out of PTON, but it actually looks like it's pretty good in here. Relatively choppy stock. I'm going to take that SPY overlay off. Take a quick look down here, see if there's anything else that catches my eye right off the bat. I've given you some really nice picks in here. So how would I approach this? What would I possibly do with SQ and ENPH? ENPH, I don't know if that has decent option liquidity or not. I am going to check and see. So I can do that a couple of ways. I can go into the stock ER. This is the stock expert rating. Option liquidity is a 4, so not bad, but they don't have uh, weekly options. They only have monthly options on that stock. So if I go into the June 9th expiration with the stock somewhere around $54, I would have to sell a $55 put spread. There's not going to be a lot of premium in there. Actually, June 19th, that doesn't look too bad. We've got a 52.50 and a 50. And that is 50 cents bid offered at 85 cents. That seems a little bit rich to me. So I'd have to look to make sure that there isn't something like earnings coming up on that. No, earnings, if I hover over the E at the end of the chart, 8.4. Boy, that seems like a pretty good spread. June 19th is this Friday. You can sell that 52.50, buy the $50 puts, do that for a 50-cent credit. You can do better than a 50-cent credit. It's bid at 50 cents, offered at 85 cents. So you could do much better than that. I might as well throw a little teaser out there. Let's see if we can get 60 cents for that, just to test the waters. I got something wrong with the order. But anyway, I think that sets up pretty well. It's got this downward sloping trend line that it's been able to get above. Big bounce on that 100-day moving average. So I think that that price point is preserved down here. So ENPH might be a nice one for selling an out of the money bullish put spread. I would prefer to use a stock that has a much better option liquidity and that actually has weekly options. So instead, let's take a look at SQ. Now, I don't want to go right in here because that's a little too close to the money. I'd rather go down to this 87 price point right in here. You can see how that used to be prior resistance. That also is a little bit of a support level right in here. That's as far as the market got this week. So that's what I'm going to be looking at is the SQ. I don't think we're going to get anything decent going down to the 87 strike price unless we go out in time, probably July 2nd. So we'll have to go out about 2.5 weeks to get a decent premium there. So we're going to be looking at that 87 put, and let's see what we can get there. We'll click that, and we'll click the $86 put, and you can see that that spread is 11 cents bid, offered at 34 cents. I need to get 20 cents for that spread. If I can do that, I've got $1 between the strike prices. I bring in 20 cents. I've got to put up 80 cents. 20 divided by 80 cents gives me a 25% return on that investment. And I am way out of the money with only 2.5 weeks left to go. So before I conclude this, I'm going to zoom in and do one more search here and see if we can do maybe a 1.5 week long spread and see what that yields. So again, we're going to go into the sorry about that. We're going to go into that option chain and we're going to take a look at that 87, 86 bullish put spread. And it is 12 cents bid, offered at 25 cents. But we're able to reduce that exposure by a week. So that gets pretty attractive to me. I'd say if I can get 18 cents in there, I'm pretty much between the bid-ask spread on the spread. That's not a bad return. That's still going to generate somewhere in the neighborhood of a 21% return in a week and a half. That's the kind of trade you need to be doing. You've given yourself almost a 10% cushion so the stock can move around, the market can move around, Every day that that spread is on, time is whittling away at those option premiums until they expire worthless. You get through this week, the trade becomes very easy to manage next week. So SQ is the one selling the June 26th expiration, and we're selling the 87 put, and we're buying the 86 put, and we're doing that for an 18-cent credit. That's your trade of the day. Take one more look, see how the market's doing. Go into the 5-minute chart. So you can see the market starting to gradually grind higher. Got this 1OP indicator starting to extend here. That was a beautiful little entry point right there until it gets up to this 240 level and really starts to crown and spike and cross over like that. You don't have to worry too much. You can ride the move, take profits when you do get that bearish cross. Do not short because we don't know if that's going to be a good shorting opportunity or not unless we get a breakdown, a technical breakdown of that upward sloping trend line on a 5-minute basis. If you don't have that, then you're just sidelined waiting to see what happens with the SPY. If it regains itself and it starts to grind higher and you got a confirming 1OP indicator, that means we continue to get long. If you're a swing trader watching this, I think that you can start selling out of the money bullish put spreads today, tomorrow, Thursday. I like it. Distance yourself from the action. This was the dip we were looking for. Bullish speculators have been flushed out. I think the coast is clear. That's it. Try and get long. Be patient. Don't force trades. Let things come into you and you'll be in great shape. If you like this content, please give it a thumbs up. Let me know that I'm doing something right, that you like the analysis. Make sure to subscribe to the YouTube channel and turn on your notifications. I do these videos all the time. I promise you, in every single one of them, I'm going to have trades in there like SQ. Those of you who are on the trial, please, if you see me posting these trades and these winners in the chat room, come in, post to my YouTube channel. Let people know that these trades are real and that you've seen them live firsthand. Thank you. Good luck with your trading. We'll see you in the morning. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.